so excited that you're here. Some of you may have been here already on a previous webinar, and you're here to hear about the updates. And for those of you that are new, we have some very exciting news to share with you. First and foremost, a few little ground rules. This is a 506c accredited investor opportunity only. So if you have questions about whether or not you are an accredited investor, we'll be able to address that later on in the presentation. And then we're trying to mute everybody just so we don't have any unexpected interruptions. And if you have questions, post them in the little chat box at the bottom, and we'll have a few breaks throughout, and then also a Q&A session at the end to get to all of your questions. So let's jump right in. First and foremost, we have our legal disclaimers here. We have a copy of this in the OM and in the investor portal, which you can review and download it. You can read it at your convenience, and we highly recommend that you do. There's a lot of important information in here. Most importantly is that we all know investments carry risks. All of them do. So we're going to cover all of the underlying risks of this deal along the presentation. And again, if you have questions at the end, let us know in the chat box. Moving on to our team, we have an incredible team that we've put together here with more than 50 years of combined experience in various parts of the real estate industry. And then $350 million worth of assets under management with all of us. Not to mention 16 full cycle multifamily real estate deals. So we know what we're doing. We've been through this several times, and we all bring something different to the table. I'm going to pass this off to Lee, our team leader here, and his wife, Megan, to introduce themselves, and then we'll go around and meet the rest of the team members.
Thanks, Megan. Hey, everyone. My name is Lee Fjord, and this is my beautiful wife, Megan.
Hello.
I am a former commercial multifamily broker with Marcus and Millichap. Before that, I was a property manager, built a property management company, lead on the aspect of asset management. So my primary role is tip of the spear when it comes to the property and overseeing the business plan on a day-to-day basis.
One thing Lee left out is that he started as a property manager as well. So he's been in this field from the deck plates, as we like to say in the Navy. So speaking of that, my background, I was active duty Navy for 9 years, got off, went to the reserves in 2017, licensed, got my real estate license then, and have been involved in real estate ever since. I started investing with Lee in 2020, and we've been working together ever since. So thanks for everybody for coming on. On to Joe and Shredda.
Thank you, Megan. Good evening, everyone. My name is Joe Johnson. I've been in the real estate industry since 1997, both commercial and residential. Excuse me. After retiring from the NFL, after a 10-year career with both the New Orleans Saints and the Green Bay Packers, my wife, Sharetta, and I moved to Atlanta, Georgia in 2004. Over the last 6 years, we've been focused on the fix and flip model, currently managing fix and flip projects in 6 states. Just added Tennessee this week. Woo-hoo! So our team will serve as the boots on ground management overseeing the CapEx budget improvement. We will work to assure that our CapEx budget maintains integrity, transparency, meets all deadlines, and most of all, each and every tenant is happy and proud to call the Phoenix place home. Take it away, Charlie.
Hey guys, Charlie Peters, pleasure to be with you guys tonight. I am the key principal and lead sponsor on this deal. So I bought my first multifamily property in 1996. I've been an owner, operator, and investor for the last 27 years. This will be my 30th apartment community that I've purchased. You guys are about to find out why we're so excited about this one. But we think it brings a lot to the table. So glad you're with us, and thank you for your time.
We love having you on the team, Charlie. This is Morgan Gonzalez here. You heard from my sister Megan earlier, and you can see both of us there in the picture. The one person missing is my wife Bethany, but she is on the team as well. We have a lot of experience in the real estate industry. I've been working for well over 20 years in real estate. We have a residential company. We specialize in luxury homes, unique properties, and we've been fortunate enough for that to take us all over the globe working with clients. And we absolutely love it. We also have a deep-rooted background in the manufactured home and mobile home industry as a dealer. And also we consult on the buy and sell of RV parks, manufactured home parks, and mobile home parks as well across the country. After all of that being said, our very favorite place to invest is, of course, multifamily. And this deal is phenomenal. And this team is absolutely amazing, in my opinion. And I'm so happy to be here working with all of them and with you guys coming on board as LPs as well.
Hey guys, my name is Colby Carlson. I am one of the asset managers and construction managers on this project. I have the benefit and the fortune to work with my dad, Dave. I have been working side by side with Lee and Charlie for the last 2.5 years now. This will be my second deal with both of them, second deal with Megan and Morgan as well. And so super excited about this deal. There's a lot of really good things, a lot of really cool things that we're going to be able to do and improve in this property. So Dad, take it away.
All right. Thanks, Colby. Thanks everybody for showing up today. My background in this is I've been in construction. I've done 40 plus years in construction, single family, commercial, industrial, and lots of ground up multifamily. Probably the best part about this project is I get to work with my son, and I get to work with all these rock stars, and especially Joe. I get to be backed up by Joe on the ground, boots on the ground, and got the NFL with us on this one. So I'll be working with Joe on the CapEx budget, and then working with Lee and everybody else that's working on the asset management side. Take it away, Sam.
Thank you very much. Can you hear me okay? Very good.
Out and clear.
Very good. Thank you, David. I'm lucky to be working with a great team. This is really awesome. And also I get to work with my son and partner, Samuel Passanese, who's on here right now. Samuel works on the front end with Colby and Lee with, underwriting deals, due diligence, and assisting with asset management. Me, on the other hand, I've been in the construction business for over 35 years, stepping up the ladder from being a project engineer in the early days to business development to now running a construction company in San Diego. Over the years, I've invested in several residential fix and flips. I bought and sold commercial buildings to now being involved in my 14th multifamily deal. Very exciting. I'm acting as a co-sponsor on this project, and I'm excited about this deal. Take it away, Lee and Megan.
Right. So what is it that brings this rockstar team together? It's one core mission, and that is that we create value for everyone we work with. We purchase poorly managed, underperforming apartment complexes and implement professional business practices to improve the living conditions in our communities and increase the quality of service provided to our residents. By transforming our apartment complexes into safe, high-quality homes, we drastically increase the value of our properties, providing substantial cash-flowing investment opportunities for you, our partners. Morgan, tell us about the updates.
Yes, so this is the most exciting part. And if you were on any of our other, we've got 2 other webinars. So if you're on any of those, this is going to be the new and exciting information that we couldn't share at that point. We actually negotiated after we went through our inspection and discovery period. We found a few items that gave us the opportunity to leverage a renegotiation here. So bottom line, we renegotiated $1 million and we took it as a price reduction. So instead of our $14,875,000 purchase price, now it's $13,875,000. So right off the bat, it's easy to say that our returns have gone through the roof, and this is going to be great for every investor involved. The appraised value came in at $15.3 million, and like I just said, we're buying it at $13,875,000. So that's a 9.3% difference and we're saving money right off the bat. We're doing what we all want to do when you invest in real estate, is buy with the best opportunities out there. That's $1.425 million in instant equity right off the bat before we even take possession. The other great exciting thing to share is about 18 months ago, we have a competitor, basically a neighboring property right across the road, that sold for $30,000 more per door than we're purchasing it. Again, just reinforcing the great deal that we've been able to achieve on the purchase of this property. And that's a huge number. That's 23.8% lower than the competitor purchased at. We're super excited about everything here. So as we move on here, you're going to see on the next screen, we have the QR code on the left side. I have spoken to a number of people that before jumping on the call that were really excited about all these new updates, and they're ready to invest. If you want to start that process right now, you can go ahead and scan that QR code. It will take you through the investor portal. Very simple process, pretty self-explanatory. And don't worry if you're not ready quite yet, or you don't capture that code, it's going to come up several more times throughout the presentation here tonight as well. Oh, and while we're there, that picture, that's a great aerial view of the property too. It's sitting on about 10 acres. There's 22 buildings plus the leasing office. And you could see that there's lots of great open space surrounded by beautiful trees. It's absolutely stunning area.
Awesome, guys. So we're going to get going and dive right into it. We're going to start at a 30,000 foot overview and then get narrower and narrower as we go throughout the presentation. This is a multifamily C2B class value add strategy. And again, this is a 506C syndication. The way this is going to work is we're going to do a 70-30 split, 70% going to the LPs and 30% going to the GPs. We have upped our CapEx budget. You'll hear a little bit more about this in detail later on. But we took our CapEx budget from $2.25 million to $2.55 million. Along with what you just learned, we've reduced our purchase price to a really great basis of $96,000 a unit, which again is significantly lower than any of the competitors in the immediate vicinity. The equity multiple, you're going to be seeing a 2.11 to 2.33 equity multiple on this deal. You'll understand later on why this is a range. But the equity multiple is simply when you put a single dollar in, you're going to be returned $2.11 or $2.33. We are financing this property with fixed low-cost agency debt at a really good interest rate. And that we are planning on holding this property for 5 years. We're seeking $6.8 million to complete this project, and you will be receiving an average annual return of 22 to 26%. Again, you'll understand the range a little bit later. All right, so the property itself, it is 144 units with some very spacious townhomes. 100% of the units are townhomes, which is super unique for the area. And this property was built in 1971. We're currently sitting at 91% occupancy as of August 10th. And we have agreed with the seller for them to put on brand new roofs at closing. So that just knocks one item off of our CapEx budget. We'll be walking into brand new roofs on that building. For the area, as you can see there are some schools that are very close to the area. Not only are they very close to the property, but not only are they close to the property, they're also brand new. Most of these schools are brand new, showing a lot of money being pumped into the area, not only by a lot of corporations, but also by the city and municipalities themselves. And again, we are very close to a lot of major corporations and major employers. We do have 22 buildings and 1 leasing office, and we have conveniently 2 parking spaces for every single unit, 287 parking spaces. Again, like I said, these units are 100% townhouses, and they have some really cool floor plans. The 1-bedrooms are lofts, so you'll be able to go upstairs into the bedroom and then be able to look over the balcony into the living area. It's a very cool setup, very cool feeling once you're in there. The 2 beds, which are a majority of our unit mix and a very, very good size, just over 1,100 square feet. They are also really cool floor plan, kind of your standard townhouse style unit. And then the 3 beds, just coming in at under 1,500 square feet. by far my favorite floor plan. They're actually 3 stories. It's a really unique floor plan. I haven't seen anything like it in any other property we've looked at. You have kind of a living room downstairs with the kitchen, and then you go to the middle floor and there's a bedroom and another living area, and then you go upstairs for the remaining bedrooms. Really cool setup. We do plan on targeting a lot of families for this property as the target demographic of tenant. So this property has all of the B class amenities, including the pool. As you can see in this picture, this pool is a really nice pool. The pool furniture out there is in very good condition. The pool deck's in very good condition. We do have on-site laundry. And then one of the cool things, like I mentioned before, we do plan on targeting families for our target demographic. As you can see there with the little asterisk, there isn't a playground in place. There was one in the past. We actually plan on putting a brand new $25,000 playground in for all of the families that are there, all of the kids that are going to jump off the school bus, this bus stop that's right in front of the property, be able to run, play, have a good time, and really enjoy the community and the property itself.
All right, thanks, Colby. I want to go through the overview of what the current condition of the property is. The property, as Morgan was mentioning, has tons of green space, which is wonderful for the kids and the families to be able to spend time and not feel like they're confined in a small area directly touching 1,000 different neighbors or 243 neighbors. Mm-hmm. And what's the only negative thing that you see with this photo? I can tell you what I see, and the only negative thing I see in this photo is these ugly, old, outdated, end of their useful life roofs. And as we previously mentioned, they are being all replaced, completely torn off and replaced with all brand new roofs. Every single building, including the leasing office at this property prior to closing. So we're really excited about having that be the main issue that's been being remediated before we even close. Now, the interiors. The seller has done a really good job of investing money into the property. Not only has he replaced 3/4 of the heating and cooling system during his 5-year ownership period, but he has also gone into many of the units and done nice updates, black appliances, painted cabinets, vinyl plank flooring, new carpet, things that we're going to keep in place in our classic units. We are going to be remodeling the units and making them extremely beautiful. But let's see what we're going to make the outside of this property look like when we're done with it. So we're going to take this property in the 21st century. We're going to reface the entire exteriors. So after the seller puts the new roofs on, we're going to reface all of the exterior of the buildings, paint every single door, every single inch of the entire exterior, as well as update the parking lot. We are going to be very competitive with the other neighbors in the area by providing a fenced and gated environment. So we're going to gate off this property, which is something that several of the other comparables that are getting above what we project to get have. So we're going to be doing that as well. Now, in addition to those exteriors, we're going to be updating the units themselves. 86 of them particularly are going to get a B-class remodel done to them. We are going to gut out the kitchens and put in all new cabinets, not just reface the doors, not resurfacing the countertops. This is not a C-class update. This is a B-class update. All brand new cabinets, hardware, counters, stainless appliances, and we're going to provide fenced-in yards for 40% of the townhouses. And the other 60% of the townhouses are going to have privacy dividers on them as well. So this is going to change the look and feel of not only the exterior of the property, but the interior of 86 of the units. And then we're also going to be doing nice small updates to the classic units the seller already updated as well. Mm-hmm. We'll talk more about those in detail later.
Everything on the exteriors are getting touched.
Everything, even the parking lot. So let's start talking about money. Sources and uses. So we have been approved for a Fannie Mae large balance loan. That's an agency loan that is fixed for the entire period of ownership. So no floating rate. debt, no risky bridge debt. This is standard everyday Fannie Mae financing at $10.8 million. We, the partnership team, are providing 1.3 million of our own money alongside yours. So let's call it, that's right at about 20%. So 20% of the equity to purchase this property is being provided by us into this deal. The remaining 80% of the equity, or 5.51 million, is going to be provided by you, our limited partners, who we're excited to have you along with us on this wonderful journey over the next 5 years. So what are we going to do with that 17.61 million? We're going to buy the property for $13,875 or $96 a door. We have closing costs and fees associated with the closing of the property, including a 4% acquisition fee. We have a CapEx budget of $2.55 million that carries with it an almost 10% reserves or contingency budget, and an additional $145,000 in reserves monies that we will hold in place during the whole period for just in case we have a rainy day. Yeah. Dave, let's talk about the details of all of those things I just discussed.
Yeah, my favorite, the CapEx budget. As you can see here, we're on the interior, we're touching 86 of the units. We're actually touching all 144 units. And like Lee said, the 86 units are getting a complete upgrade from a C to a B, and then the other 54, I think it is 58, are getting they'll get touched and upgraded too. So that 14,900 per door that you're seeing is actually for the 86, so it's not going to be quite that much for the 86. Exterior, you can see we're doing a lot on the exterior. We're doing exterior paint, new signage, parking lot repairs, which needs it pretty good, lighting and security, gutter soffits, HVAC systems, upgrading the concrete and the handrails, power washing, golf cart and gator, laundry rooms, landscaping. I'm not going to go on. You guys can read all that. But the best part about this budget is the contingency in it. It's a real conservative budget. And what I'm used to in a budget on a new build is I'm getting money taken away from me all the time. And on this budget, we've got cushion in it. We've got cushion. Lots of line items have cushion in it in case we run into items that don't make sense. We got to upgrade what we're doing to them. So I'm real excited about this one. I'm excited to get going. The one of the best things we're going to do is put that gate in. You're seeing the entry gate. So that'll give us a little added security for everybody on site, along with lighting and security. So take it away, Samuel.
Right on. Thanks, Dave. All right, everyone. I'm super excited about these rent comps. During due diligence, I spent the better part of 2 days driving around and checking out more than 10 other apartment communities. And I have to say, I'm even more happy about our conservative projections. Stone Tree right here, it's the closest community within 100 feet of our complex. They're getting $13.35 for their 2-bedroom, 1.5 bath townhome. Our current average rent for our 2-bedroom townhome is $10.68 a month. So just by bringing this up to a classic level, we're pretty confident we're going to be able to achieve $12.75 a month. And that's like a little bit over $200 a month, right? For the renovated units, we're conservatively projecting $13.50 a month. As you can see here, Stone Tree doesn't have any upgraded lighting or flooring, no updated cabinetry or toilets or any updated appliances. It's super outdated. You heard Lee and Dave talking about, our CapEx budget and what we're going to spend on these units. I'm confident ours are going to look much, much better. So, even Morgan said in the beginning of this presentation, back in March of 2022, Stone Tree Apartments sold for $126,000 a door. We're buying ours at $96,000 per door, $30,000 less than what the competitor did. Another community that's about a quarter mile down the way, Rugby Valley, is getting $1,515 per month for their 2-bedroom. And they're doing the same renovation plans that we're going to go for. They're also the only one that has a gate in our area. So just by us putting that in, we're kind of going to mirror, you know, their status in the neighborhood. And because our property is majority 2 beds, we're going to be doing most of our renovation to the 2 bedrooms. To Megan.
Sorry about that. I was on
Megan?
mute. There we go.
Oh, there she is.
Again, we have the QR code here ready for you to scan if you're ready to invest after hearing our new updates about the project. Couple of things that I'm going to also throw in there is that, just to remind you, brand new roofs, that's hundreds of thousands of dollars worth of brand new roofs on this, not to mention the price reduction, the appraised value being higher, our competitor buying for a higher price per door, all sorts of amazing things going on in this deal. We couldn't be more excited about it. So if you're ready, go ahead and scan that code. It's going to take you to the investor portal. But next, we're going to let Joe talk to you about the local Atlanta market, since that's where he lives.
Yes, I do. Thank you, Megan. Atlanta, Georgia. We all know Atlanta has been booming and growing since the 1996 Olympics. Right in the heart of Atlanta is East Point, which is one of the fastest growing communities within the city of Atlanta. You'll see here a lot of big name companies that have chosen to make Atlanta, Georgia home, whether it's a corporate headquarters or whether it's some type of a distribution facility or something of that sort. But they have, a lot of the major companies have a presence here in the city. One of the biggest things that we're extremely excited about when you talk about multifamily and value add, and you look at the path of progress, you'll notice that with our property in the East Point area, there is a major construction project going on by the name of 6 West. It's a $1.5 billion facility, and for that type of money to be put into an area is going to be an extreme advantage to all the tenants and everyone within that community. And we're extremely excited about that. Next, when we kind of broaden out to the city of Atlanta as a whole, as I'm sure a lot of you have traveled to Atlanta in the past, and if you've flown into Atlanta, you know that the airport here in Atlanta is the busiest airport in the world. It was stated that it was the busiest in the country, but that has since been changed to it is the top busiest airport in the world with over 700 flights a day, and that's just a sentiment to the population of the city. A lot of people that visit the city, tourism. Atlanta has just been growing, like I said, since the mid 90s. You'll see the population growth here. Job growth is over 20%. The unemployment rate is down close to 3%. And we're extremely excited about our property being located in a city like Atlanta, Georgia. Next, you'll see here a lot of big name companies. Delta, which is actually headquartered here in Atlanta, Georgia. Walmart has a distribution center here. A number of big companies have chosen to make the Atlanta, Georgia area home. And a lot of that is a lot of big companies are coming from the West Coast and the East Coast. And primarily it's because they're able to lower their overhead. It's not as costly as the West Coast or the East Coast, but at the same time, you still have all the advantages that you would have in any other major city. So you get the same big city feel, but not the big city cost. So Atlanta, Georgia is huge. As you can see, a lot of big name companies have come in and they have a presence here. At Porsche, they have, this is the North American headquarters for them. As you know, they're a foreign company, but they've chosen Atlanta, Georgia to be their home in the U.S. Another major facility is the Aerotropolis Center, which is a $100 billion complex, which houses Ford, Porsche, and also Delta Airlines. So we're extremely excited about that. And when you talk about path of progress, I don't think it gets any better than what we're looking at here in Atlanta, Georgia. And next, we're going to talk about what I know a lot of you people have come here today, and that's the investment summary. So if you could take it away, Morgan.
Yes, the important part, right? You investors want to know what you're going to make on this deal. So this page is going to talk to us about the investment summary here. We've already gone over a portion of this. The total raise on the deal, the capital that we're seeking is 6.8 million. We, as the GPs, have already committed 1.3 million into this, so it leaves 5.5 left over for our LP or limited partners to invest as well. The investors are going to receive an 8% preferred return annually. Those are going to be paid out in quarterly distributions. They will start on the third quarter. The first 2 quarters, you do not receive the quarterly distributions. That's when we're taking over the property, starting to put a bunch of money into the CapEx and building it up. But that does average out. And we're going to go through projection pages later, so you're going to see more details of that. Upon the sale, the total annualized return, this is the special, that big number that everyone really loves to see, 22 to 26% is our range. Again, we will go into details later and discuss why we have a range there depending on the cap rate when we sell. And then, of course, the bottom of this here, the projected equity multiple range. This is going to be between 2.11 times all the way up to 2.32 times over the 5-year period. So basically, every dollar you invest, you can expect to receive $2.11 to $2.32 in return. So we're going to go through specifics a little bit later on all of these details here.
Thanks, Morgan. So I am the essentially lead underwriter for the project, and we have put painstaking amounts of effort and hours into the initial and then reiteration and re-underwriting and adjusting during our due diligence period, during our contract to close period, during the negotiations with our lender, so on and so forth. And I believe that we're essentially at the very end of that, since we've renegotiated the purchase price down by, once again, $1 million from a number that we were happy with earlier. So, and this gave us an opportunity, that $1 million reduction, to be additionally conservative with our numbers and adjusted a few things in our underwriting in order to make sure that we were overly conservative with this particular project. So, our average rent, to be put bluntly, on the property for market is just under $1,300 on a conservative basis. You heard about Samuel's rent comps. We feel that we can hit $1,289 in market average rent, but that's not what you actually achieve. Those are your market rents. Then you have loss to lease, bad debt, concessions. So our total and physical vacancy, we operate a portfolio of over 700 apartments, myself alone. The average vacancy for that portfolio is 97 right now. And 8% is very conservative, even during a transition period. And when you include the 12, it makes it 20% economic vacancy in the first year built into these numbers. The other income, that's a number that we are not changing from what the original seller is, or the current owner is currently bringing in. The current owner is currently bringing in, this includes the ratio utility billing, bill it back for utilities. So he's bringing in $267,000, even though our institutional quality management company has historically beaten previous owners' abilities to collect additional income, other income, we left that number alone. We have only increased that annually by 3%, as we have for the rest of the income and expenses across the board. Taxes. We increased our taxes in comparison to what the seller's taxes are today by 80%. We approached and had conversations with the local assessor of real estate taxes, and he felt as though that was a very conservative number for us to add into our assumptions. They're assumptions because we don't know what the new tax rate will end up being, in 2024. And other items that are very conservative, we have our payroll. Payroll is budgeted at around $1,500 per door annually. We overstaff our properties so that our tenants can have a wonderful place to live where they're getting quality service, and we pay our employees very, very, very well. And at the end of the day, after we bring in or spend around a little over 40% of our income, pay our debt service, we'll still have left over just under $500,000 to distribute to our investors. So let's talk about when we sell the property. 5 years into the future, we will have updated 86 of the apartments all the way up to A class, B class. We have, done the exteriors. We've done, the playground. We've done everything. We believe our market rent will only be $1,450 at that point 5 years from now. I believe that considering the amount of rent growth in the past, that's a very conservative number. In addition to that, we have 10% economic vacancy in 5 years, even though our stabilized assets are running at 97% physical occupancy and usually around another 1% loss to lease. So we're usually running at about 6. This has it at 10. Also, all of the numbers that you see there continually grow each year. At the end of the day, even though we will pay off our debt service and start paying down our principal, we'll still have $739,000 or over 10% to distribute to our investors in the 5th year. We'll turn around and we'll put the property to market. Somewhere along the lines of 48 months, we'll start the process of putting the property to market. I was a former broker. You want to plan ahead. We plan to do that right around 48 months into the ownership period, start the process, start the marketing, start receiving offers on the property, and put the property to sale before the 60th month of ownership. So you'll have an opportunity to be able to review all of these on your own time. But the one thing that I really want to focus on is marketing. We budget over $100 per unit per year for marketing, which is a fairly conservative budget for marketing. In addition to that, the taxes, reiterating the 10% economic vacancy, we've put a lot of time and effort into making sure that these numbers have enough room in them to be, reasonably achieved without having to extend ourselves financially in any way. All right, off to Morgan again. And please put any questions that you have in the chat and we'll address them.
Yeah, any questions you guys have, throw them in the chat box. And if it's appropriate to take a little break and answer them during this, we can. Otherwise, we will certainly cover them at the end with a full open Q&A. Again, here we have the QR code on the screen. So if you guys are ready to go ahead and start the process through the investor portal, by all means, you can start that now. I wanted to reiterate something else too before we move forward. Everything that Lee was just talking about there, and going back to when Dave was talking about the CapEx budget, I want to point out these numbers are so ridiculously conservative. I guess that's just the best way I could say it. What he was talking about there was basically padding and budgeting in a scenario that it's just going to make all of our jobs easier going forward. It's going to make the returns even better. We always want to underpromise and overdeliver. So if you read in between the lines, that's kind of what we're getting out there. If we move forward, we're going to start to now see some of the exciting stuff with our investor projection pages. The first one here is based on a 6.5 cap exit. So this will be in our 5-year mark when we sell the property and exit. This one is based on 6.5 cap. And then we're going to go to the next page here, which is going to be essentially the same thing based on a 6 cap. Before we even discuss those numbers, I want to point something out. The average cap rate right now in the Atlanta marketplace is 5.02. The average cap rate, if we get even more specific in our micro market here at East Point, it's 5.57. So we're still being really conservative on the estimates for the cap rate on sale. We always want to continue that, under promise, over deliver scenario. So this is going to be a great breakdown here. This is based on a $100,000 investment, just for simple numbers. It's easy to base your math off this, whatever you decide to invest. You could see we have the breakdown from year 1 through year 5. When we talk about cash flow and cash on cash, we're really referring to the same thing, but cash flow is going to be presented in dollar amounts. Cash on cash return is going to be presented in a percentage amount. We talked earlier that the quarterly distributions for your 8% preferred return that will be paid out in quarterly distributions, the first 2 quarters are not going to have quarterly distributions. It will start on the 3rd quarter. So the first year here on the chart, year 1, your cash on cash return is going to be slightly lower than that 8%, 6.57%. You could see we start making up for that immediately in year number 2 at 9.46%, 9.84% year 3, and so on and so forth. So at the end, it's going to absolutely average out to your 8% preferred return there. If you look at the bottom category there with the dark blue row, you can see the cumulative return throughout that duration. By year 5, it's $131,744 in return. The real fun part to see, if you want to just get basic here, a $100,000 investment is going to pay you back $231,744 at the end of the 5 years when we sell this property. And in my opinion, that is an amazing return, and I'm really excited about this one.
Yeah, guys, so let's talk about the tax benefits. Most of the people on here are probably pretty experienced, but just in case, we're going to walk through depreciation. This is one of the great secrets of real estate investing, is that you put a down payment down on a piece of property. That's your investment. You get to deduct, usually it's about 90% of the purchase price. You got to back out the cost of the land, but then you get to deduct 90% of the purchase price, even though you've only put down a small portion of that. So depreciation is a beautiful thing. We take that one step further and accelerate the depreciation through a cost segregation study. If you've invested in one of our deals before, we do this darn near almost every time, so you've probably already seen it. But basically it says, in a nutshell, you buy a piece of property, you can depreciate the amount of the building over 27.5 years. A cost segregation breaks that out and says that instead of buying a building, you're buying a building plus 144 refrigerators, 144 dishwashers, 144 stoves, 144 hot water heaters. All of those can be depreciated over 5 years. And so we take the building, we break out all the parts with shorter depreciation schedules, and we accelerate the depreciation much faster. During COVID, the government came out and said you can actually do bonus depreciation. And so we're allowed to do 80% bonus depreciation right now. And I guess the bottom line on all this is that if you invest $100,000 in this deal, we're going to look for a paper loss of around $40,000 to $60,000. An emphasis on paper loss. We are not expecting to lose money in this first year. So you're actually going to make money and at the same time get a nice tax deduction that you can use to offset any capital gains income you may have. So it's a beautiful thing, but we are doing a cost segregation study with accelerated depreciation. Here's Sam, and he'll tell you more about the investment process.
I love that cost of depreciation. The segregation always saves me on taxes, Charlie. That's for sure. I love that. That's one of the biggest reasons I'm investing in these deals. It's awesome. All right, folks. This is the fun part where we get to invest. You got your sponsor. They sent you a link to the cash flow portal. You move over and you click on the cash flow portal, and it brings you into the documents for you to review. There's a questionnaire you fill out, and then you sign. Now, for those of you that did not get invited by a sponsor or so, I know Colby on the chat has a link that you can click on there. And then you've seen Morgan and Megan and Lee show you the QR code. You can scan the QR code and it'll take you straight to the cash flow portal. It's very simple. So once you've reviewed the documents, answer the questions, then go into e-sign. You please electronically sign the offering documents within the cash flow portal. You then hit send. It goes back to the review committee, which is our team. They will review it, make sure that you're accredited, and then it gets sent back to you with a funding instructions, either ACH or a wire. And then what I would suggest is you fund your deal immediately because these shares go quickly. So using the investor portal, you can send the funds by wire or ACH. And we're due to close sometime in October, as soon as all the funds are received. Next slide, please. All right, frequently asked questions. We've answered a couple of the questions during the webinar here, but I'm going to go through a couple of them right now. What is the time horizon for the investment? Well, we're set to close in October. As soon as all the shares and the investments are received, we're going to probably close as soon as we can. How will the profits be distributed to investors? Well, you've heard from Morgan about that, and also from Lee. This deal has a preferred return to investors before executing the sale of the property. After the 8% preferred return, the profit is split 70% to the limited partners and 30% to the GPs. Distributions begin after the second quarter of ownership or after the second quarter of close. How much are the general partners contributing to the deal? Well, you've heard this from Lee, you've heard it from Morgan. We're investing $1.3 million of our own money into this deal. We believe in this deal. I think it's a great deal. I'm investing in it, and it's vitally important that we invest in the deal because we believe in it. I'm excited about it. What are the investor requirements to invest in this deal? Only accredited investors can invest in this opportunity. You can click on the link, what the review the SEC qualifications for accreditation, but the basics are this. What qualifies someone as an accredited investor? According to the SEC, the Securities and Exchange Commission, an individual accredited investor is anyone who has earned income of more than $200,000 a year in each of the last 2 years and reasonably expects to earn the same for the current year, or you earn $300,000 together with your spouse. Now, there's another glitch to this too, which is great. Or if you have $1 million in assets, not including your personal home. There are other accreditations that you can look up on the SEC site, and it'll tell you other qualifications. What is the minimum amount I can invest in? The minimum amount investment will be $50,000. Now, I've always said if you don't have $50,000 and you have maybe $25,000, maybe you can team up with another person that's accredited also, and you can team up and throw both $50,000 or $25,000 each into an LLC, and you can invest together. That's always a thing to do too. Can I invest money from my IRA? Yes, you can. You can set up a self-directed IRA and deliver the funds from a self-directed IRA. If you're not familiar with that, you could reach out to Megan Gonzalez and she can help you out with that also. Megan, if you can give your email address maybe in the chat or something, and people can reach out to you on that sort of thing. Is the due diligence complete? Well, as you heard from Dave, we spent 3 days doing due diligence and we had 40 contractors show up, looking at the paint, looking at the roof. We looked in drain lines and we spent 3 days. All of the team was there. Our property management company was there. We did a complete due diligence and we know what the CapEx budget is going to be. Thank you. Back to Lee, I think. No, I'm sorry. Back to Charlie.
That's okay. Yeah, no worries.
Sorry about that, Charlie.
Thank you, Sam. So, guys, this is the second to the last slide. We're about to wrap up right here, but yeah. So, are you in? That's the question. Hopefully you understand why we're excited about this property and this opportunity, and hopefully you've caught a little bit of the vision for what this property is going to be. I just wanted to, in closing, kind of touch on a couple of things. I mentioned earlier, this is my 30th apartment complex that I've purchased, and people ask me, how do you know if a deal is a good deal? How do you know if a deal is a good deal? Great question to ask. And we look for properties that check boxes. Okay, so the boxes that this property checks, it's in a transitioning area. All the units are townhomes. They have solid floor plans, plenty of parking. The paint colors are god awful, and paint is cheap. We're putting our own money into this deal. That's a very important box to check if you're ever considering something like this. It's in a growth neighborhood. There's a new elementary school that our tenants are going to be able to send their kids to. A cool little thing, if you're standing at the front of the property, looking at the street and you go all the way down to the right side of the property, you're looking at the backyard of a house that's currently listed for $1 million. Okay, so we feel good about the neighborhood. Delta Airlines is based in Atlanta. We touched on that. We're not far from the corporate headquarters of Delta Airlines. If you buy stock in Delta Airlines, there's absolutely nothing you can do to make the value of that stock go up. But if you buy an old apartment complex with orange doors and a broken up parking lot, there's 200 things you can do to this thing to make it go up in value. We have a very detailed business plan all laid out to do that. And we're not financing the upgrades. Those are going to be made with investor equity. So that's a big deal because it helps mitigate the risk in the deal, if that makes sense. So yeah, you've seen what we're going to be doing. I think the odds that the value of your investment going down after we make all the improvements to the property that we're going to make is probably pretty low. So that's why I feel like it's a very safe opportunity. That's why I'm investing my own money in this deal. You're going to hear from the person that invited you tonight. Be sure and scan that QR code, get your name in there. This is absolutely going to fill up. And so you don't want to miss out. We had our last deal and there were people who wanted to invest after we'd already raised all our money. And once it's full, it's full. So don't miss your chance. Last thing I want to touch on is this team. We probably honestly should spend a little more time on it, but if you look at the people in the boxes there, this is my 5th deal with Leif Jord. He's an awesome, just an awesome all-around guy and an excellent asset manager. He's all over the details. What slips through any cracks he may have, his wife Megan is there to clean things up. So they're an awesome team and do a great job. Worked with Megan and Morgan before. They're top notch as well. Joe, we got the former NFL guy in the house, which is kind of a cool thing. And he's our boots on the ground. He flips properties in Atlanta. This is what he does. Our lead on the CapEx program is a guy who built apartment complexes for 35 years. General contractor. You could not pick a better guy to oversee the CapEx program. So this team is, it's pretty solid. So anyway, we're excited once again that you guys are here. Go ahead and once again scan the QR code there. Go ahead and get your info in, and we will look forward to seeing you at Phoenix Place in Atlanta, Georgia. Megan.
Thank you, everybody. That was just absolutely beautiful. And I want to thank everybody for joining us. I've been watching the chat box as we've gone through, and we have some great questions. So as we do our little Q&A session, if you're ready, here's the QR code for you to scan and get started in the investor portal. But the first question I want to address is a great question. When is the deadline for investing on this? And this is kind of a tricky question. We're going to close escrow on this property in October, mid-October. However, it's more of a race to funding. You can commit in the investor portal to investing however much you'd like, but until your money is actually wired and transferred to our account, somebody else can swoop in and fund the rest of it and you miss out. So there's really no deadline. It's do it as fast as possible so you don't miss your chance. Like Charlie just said, the last deal we did, we had more people wanting to invest than we had space for. So you don't want to be the person at the end that's missed out. Let's see.
Let me also jump in there real quick, Megan.
Yeah.
We are approximately just a little bit over half funded at this point. So in case that's somebody's question, I just want to throw that out there. There's still room left to get on board, but time is of the essence. We want to make sure that, anybody who really wants to jump in and invest does that sooner rather than later so they don't miss out on this opportunity. This is not one I would want to miss out on, I'll tell you that much.
That's perfect. That was another question of how much capital has been raised so far. So there is space, but we have been incredibly successful on this one with people wanting to get in. Let's see. Next question. At the end of the 5 years, what meat is left on the bone for the new buyer, making the assumption that they want to add value as well? Lee, I'll let you take that question.
Absolutely. As a former broker, you always need to present a value add opportunity to the future buyer. And we are going to do two things. We are going to only bring 86 of the 144 units up to a B class level, therefore leaving an opportunity for the future buyer to bring the remaining 56 units up to that level as well. In addition to that, we are doing a B class update. We're doing brand new laminate countertops. So there are some updates that they could choose to add, like granite, if they chose to or wanted to, or felt the market was important to, or needed that. An additional thing that we're going to be doing that we have put in place before in the past is we are going to put an in-unit laundry into one of each of the 3 floor plans, therefore proving out the process and the ability and how much it should cost and even what types of permits are required and all of the heartache and headache involved with creating the blue sky. And we're going to deliver that 3 units with the in-unit laundry to the future buyer, letting them know what their future would look like with laundry in those units. And we'll do that towards the latter part of our ownership in probably the 4th year. So, yeah.
Perfect. I have another question for you, Lee. This is very complimentary. I know you're a rock star underwriter, Lee. That's what they actually say. But do you have any concern on the insurance quote being $645 per unit?
So I was in charge of getting our insurance quotes, and the price that is in our presentation is actually a hard quote that we have received. Getting the new roofs helps our premium. In addition to, we have a really great relationship with our insurance provider. We have multiple properties insured with them, so they were able to give us a multi-property discount. In addition to that, we still have insurance brokers also working to see if we can beat that current insurance rate. So, that is a set in stone rate that we're good to lock in, but we're always looking to see if we can save a little bit more too.
Yeah.
Perfect. And I think a couple guys could actually fight over who will answer this one. What was found during the due diligence inspections that allowed for $1 million price reduction in the purchase price? And does that add any additional risk to the deal?
I'll start with that, and then maybe Lee, if you want to jump in, if there's something else I missed. I said earlier, very particularly, it created an opportunity for us to leverage to renegotiate. So what I want to point out on there is we did not come across anything that was scary that made us think, uh-oh, we shouldn't do this deal. There was no fear factor involved with it. Again, it was an opportunity that we took to leverage into renegotiation. Essentially, the big part of that was preventative maintenance that hadn't been done. The current owner is a triple net guy. That's where his portfolio is all triple net properties, with the exception of this one. This is his only multifamily property. And let's just say it simply, this isn't his specialty. He didn't manage this property well. The property management they have in place is not the best. Those create opportunities for us, and they left a lot of things untouched on the property. Some specific examples: the gutters on the roof on all the buildings. In our opinion, they look like they've probably never been cleaned out in the 5-year duration that he's owned the property. When you don't clean out your gutters, it turns to sludge inside the downspouts. The gutters overflow. When it rains, the watershed comes off the roof, overflows the gutters. Then it lands on the ground in the, let's call it like planter bed type areas near the buildings. Those then overflow, and there are a few of the units that had water intrusion down there. Simple fixes, right? Clean the gutters, make sure that doesn't happen again. Add the leaf guards, which we intend to do. That's in our budget. the remediation is very, very simple to take care of the units that were flooded. That's not a scary thing at all. In addition to that, there was some storm drains that were clogged. And again, same thing like with the gutters. When the storm drains clogged, it just built that water, pooled it up, expanded out, flooded a few areas, washed some dirt away. Again, it doesn't take any rocket scientist to figure this stuff out. They were very, very simple solutions. The cost to fix those things is not that big. But when you renegotiate, of course, I don't know, can I say embellish a little bit? We use it into our advantage. We also had some things with, we had full sewer scopes done through all the lines, and we intend to have them hydrojetted. We already have the quotes for that. We use that as another opportunity to say, hey, once you hydrojet, now you open up a potential can of worms with the things that are unknown and you can't see right now. So we, again, don't have big concerns. We've padded the budget. We have the money there to handle those if there is problems. There was a bunch of little things. There was nothing big, major, or scary.
Yeah, the letter that we sent in specifically said there's not one big thing, rather it's a bunch of little things. And then we highlighted air conditioner filters were another one. Their air conditioner filters look terrible because the guy wasn't doing preventive maintenance. If you take a picture of that, a black air conditioner filter, I mean, it doesn't look good to an owner. So yeah, we were able to get that. We actually sent in a cancellation and a concession request at the same time and told the owner to pick one.
We also, part of it, we understood or had the belief that the current owner wanted to close this by the end of the year. And if they decided not to negotiate with us in our favor, there's no possibility they would get this property closed by the end of this year. And then he would lose that tax advantage. And, we had a number of things in our favor that we could leverage.
Fabulous. Okay, this is a really simple one from Teresa. Is the property pet friendly? Yes, it's pet friendly, but of course with some stipulations to that: size, breed restrictions, number of pets. There will be pet fees, all of those things. But yes, of course, you can have a pet. And then will there be security cameras on the property or just the security gates? Lee, remind us, are we doing security cameras on this one?
We are, not just security cameras, but also exterior lighting on throughout the entire complex as well. So we've budgeted, I want to say our budget for that is $30-something thousand. Dave, you might have it memorized, but I think our budget just for cameras and lighting on this property is I think like $37,000.
Yeah,
and that quote has been that number has been quoted by a service provider to the scope of work that we have requested. So we're adding additional lighting and we're adding cameras throughout the entire property. It does have a current security system, but it's very rudimentary and dated. So we're going to drastically upgrade that.
And to reiterate this, we're talking about adding and the addition of the security gate. That came into play after the renegotiation. We had extra money in the budget to be able to push around in different categories to get the best result that we wanted. And I believe adding that security gate is going to be an absolute game changer. And when you top it off with the lighting and the cameras that we're planning to add in there as well, this property is going to be completely transformed from what it is today. And it's going to have a much better, tenant base. Everything about it's going to be improved top to bottom.
And so far, the last question is another easy one. Is there any housing assistance on this property? And the answer is no. There is no government assistance units on this property. We do have others that will be coming up for investment opportunities that have that, but this one does not.
Yeah, that's something that also helped us with our insurance rate.
Mm-hmm.
Fabulous. So if we don't have any more questions, we can wrap this up. I know a lot of people were anxious to get a copy of this recording so that they can review it and share it. So we will definitely email it out to everybody that has attended. And if you have questions, my email is in the chat box, and you have your sponsors' contact info, of course. So reach out and ask away. Thank you, everybody.